The financial markets are currently abuzz with the movement in silver prices, which have seen a significant tumble to $30.30 amidst the strengthening US dollar. Investors are eagerly awaiting the preliminary US&P Global PMI report for June, expected to provide crucial insights into the economic health of the manufacturing and services sectors. Adding to the market dynamics, the Federal Reserve is anticipated to cut interest rates twice this year, influenced by a softer inflation report and slower than expected retail sales growth. This backdrop paints a complex picture for investors who are trying to navigate through the oscillating silver prices and the shifting economic indicators. Will the upcoming PMI report deliver a shock that could alter the course of silver prices once more, or will it reaffirm the current market sentiment? Silver price forecast. XAG/USD plummets to $30.30 as US dollar holds strong ahead of US PMI. In a dramatic turn of events, silver prices, XAG/USD, have sharply declined to approximately $30.30 during Friday's American session. This drop is largely attributed to the firm stance of the US dollar, USD, which is maintaining its gains as the market anticipates the release of the preliminary United States S&P Global Purchasing Managers Index (PMI) data for June, scheduled for 13:45 GMT. The US dollar index (DXY) has climbed to a 6-week high, hovering around 105.90. This surge in the USD is driven by global PMI figures that have consistently failed to meet market expectations, thereby fostering a gloomy market sentiment. Should the upcoming US PMI data also fall short of expectations, it could place additional pressure on the USD index. Economists are projecting that the PMI report will indicate a deceleration in growth within both the manufacturing and services sectors. This potential slowdown is causing ripples across the market, influencing trading decisions and investment strategies. Despite the current dip in silver prices, the overall outlook for silver remains positive among investors. Many anticipate that the Federal Reserve will initiate a reduction in interest rates starting from the September meeting. Current market sentiment suggests that the Fed might implement 2 rate cuts this year, contrasting with the single rate cut signaled in the policymakers' latest interest rate projections report. The expectation of dual rate cuts by the Fed has been spurred by a subdued U.S. inflation report and a less than robust growth in retail sales data for May. Speaking on the inflation outlook, Minneapolis Fed Bank President Neil Kashkari stated on Thursday that inflation is expected to revert to the bank's target of 2% within the next 2 years. However, Kashkari expressed concerns regarding the persistently high wage growth, which could pose challenges to controlling inflation. Silver technical analysis. From a technical standpoint, silver prices have shown resilience, rebounding after finding buying interest near the lower boundary of the rising channel chart pattern on the daily time frame. The white metal has managed to climb above the 20-day exponential moving average, EMA, near $29.90, indicating a potential shift towards a bullish near-term trend. The 14-period Relative Strength Index, RSI, is fluctuating within the 40.0–60.0 range, reflecting a state of indecisiveness among investors. This range suggests that the market is currently in a wait-and-see mode, with neither bullish nor bearish forces taking a definitive lead. Analyzing the key levels, the silver price opened the day at 30.73, with the previous daily high at 30.79 and the daily low at 29.71. On a weekly scale, silver has touched a high of 30.26 and a low of 28.66. Looking at the monthly perspective, the previous high was recorded at 32.51, while the low was at 26.2. The daily Fibonacci levels place the 38.2% retracement at 30.38 and the 61.8% retracement at 30.12, crucial markers for traders watching for potential reversal points. The pivot points for the day are also significant. The first support level, zone, is at 30.3, followed by deeper supports at 29.33 (STU) and 28.95 (STRI). On the resistance front, the first resistance level, RON, is noted at 31.11, with subsequent levels at 30, 1.49 R2 and 32.20 R3, which could act as hurdles in case of an upward movement in silver prices. Current silver market trends and future outlook. Today, the silver market opened at a price of 30.73, showing a daily change of 0.56 and a percentage change of 1.82%. These figures indicate the volatility and rapid shifts characteristic of the current precious metals market. The daily simple moving averages, SMA, are also telling. The 20-day SMA stands at 30.26, the 50-day SMA at 29.11, the 100-day SMA at 26.68, and the 200-day SMA at 24.92. These moving averages are crucial for market participants as they provide insights into the long-term trends and potential support or resistance levels. As we look ahead, the performance of the silver market will be closely tied to the broader economic indicators and the monetary policy decisions by the Federal Reserve. The anticipated PMI data release will be a critical factor that could sway investor sentiment and influence the direction of silver prices. Furthermore, the Fed's actions regarding interest rates will play a pivotal role in shaping the market dynamics for precious metals. With global economic uncertainties and fluctuating market conditions, investors and traders are keeping a close watch on these developments. The interplay between the strengthening US dollar, economic data releases, and monetary policy decisions will continue to drive the volatility in silver prices. In this dynamic and unpredictable environment, how will the upcoming PMI report influence silver prices, and will the Federal Reserve's anticipated rate cuts provide the much-needed boost to the market? Share your thoughts and predictions on the evolving landscape of the silver market.